Hi, Jonathan York, Bay Financial Partners, looking at the investment markets. We're really waiting for that sort of indication from the US on the data on that unemployment, which came out Saturday time, New Zealand. And it really was pretty strong. It was one of the strongest reports there for quite a while, and now really pushed up the expectations now for the Fed will finally look to increase rates in December. The market was looking for 185,000 jobs to be created. We actually got over 270,000. It really was, a pretty major increase, and really now increase those expectations now that the Fed will finally look to increase rates in December. It's got up to around a sort of 70% chance. And this was further sort of reinforced as well with signs of a little bit of wage inflation coming through. Those hourly earnings numbers were up again, and again that's just further indication now that as we're approaching potentially sort of full employment in the US with an unemployment rate of around 5%, now wages are starting to increase a little bit. The market was looking for 185,000 jobs to be created. We actually got over 270,000. It really was, a pretty major increase, and really now increase those expectations now that the Fed will finally look to increase rates in December. It's got up to around a sort of 70% chance. And this was further sort of reinforced as well with signs of a little bit of wage inflation coming through. Those hourly earnings numbers were up again, and again that's just further indication now that as we're approaching potentially sort of full employment in the US with an unemployment rate of around 5%, now wages are starting to increase a little bit. Now again, as sort of discussed here before, that really should be seen as pretty positive news for the economy, that it is strong enough to stand on its own 2 feet and really can get away from this artificially low interest rate environment. But it won't be all sort of guns blazing. It won't be looking for sort of hikes every sort of meeting. It will be a very slow, steady process. And as discussed before, I think we have to accept now that we are going to have sort of a new norm in terms of lower interest rates sort of going forward than historical levels. Also as well, it looks like the Bank of England will be looking to increase rates in the sort of 2016 as well. The governor there has come out and made quite a few comments now that the economy should expect to see interest rates increasing as we look to go forward into 2016. So what does that mean in New Zealand? Again, sort of pretty interesting here. We've still got a pretty rampant housing market. Dairy auctions have come off the boil a little bit, but are still looking as though they're probably not quite as dire as first anticipated. But I say with that housing market as well still being pretty rampant, and that's starting to sort of filter out of Auckland as well now, starting to spread down the country. We think rates will probably on hold in December here in New Zealand. Potentially there could be a BNZ capital note issue in the marketplace. They've made some indications that there could be an issue. And so, if you are interested in that, call us on 0800 867 323. As yet, sort of term unknown, and also the rate as well. But looking for income out there. Bank term deposits sort of sub 4%. It'd just be interesting to see where it does come and what sort of term. If you are looking for income though, there's still plenty of options out there. Some of these high dividend shares and some of the property trusts, etc. still offer some pretty attractive rates. Some of them are tax paid as well in terms of their sort of tax structure under the PI investment schemes. And if you're interested in those, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We'll look forward to speaking to you soon.